Yo, Carlos, man, where'd you get that article on BPTH? That's crazy.
Hey man, so I was searching stuff and that came up and I was like, oh, BPTH, a stock that we saw that craziness happen a couple of months ago. So I started reading the article about the squeeze and I just couldn't believe it, man. It was just insane.
Right? I've only seen that in the movies before. I had no idea this stuff happens like behind the scenes of these stocks we trade.
Yeah, that's the thing. You see these crazy parabolic moves happening, and you're not thinking about it in the back end on what's actually going on with some of these companies, right? We're just seeing the price action moving higher, someone's getting squeezed, and people are jumping out. But there's horror stories like this that happen in the back end that we probably, unless we look into it, we never know about.
Yeah, $16 million getting losing that in a short squeeze is a horror story. We got to share this with the community, man. How can we do this?
Yeah, let's actually put something together. I could do a blog, maybe you could do a recording, and then let's share with the community
All
because I
right,
think it's something that we don't always see often.
yeah, man. All right, I'm just gonna read it verbatim then, so everyone can just listen to it, maybe when they're car or when they're on a walk or something. And if you can do some analysis on it, that would be killer.
That is a great idea, man. Let's get going on that.
All right, man. Well, I'm gonna start right now. See you later.
All right, talk to you later.
Bye. So I am gonna read to you this report verbatim. Sit back, take a drive, just go on a walk, but just listen. There's not gonna be any visuals. You are gonna learn a crazy story about BPTH and what happens behind the scenes on these stocks that we trade that we have no idea is happening. This report will be about the death of market maker Spartan Securities Group Ltd, parentheses, Mika, as a result of an ill-timed and unauthorized short position in Biopath Holdings, BPTH, on March 6, 2019 by Mika's principal trader, Scott Reynolds. It was rumored at the time that Mika was stuck in a short position in BPTH that resulted in huge losses for Scott Reynolds of Mika. Soon after, Mika exited from all of its position in all of its stocks, and the rumors appeared to be confirmed. Today, I noticed that Spartan Securities Group Ltd website had a message on the front page that it will no longer be providing brokerage services. After seeing that, I got super curious, which is when it came to my attention that Axis Clearing, formerly Core Clearing, the clearing firm for Spartan Securities Group, had filed a lawsuit on March 13, 2019 against Scott Reynolds in an attempt to recover some of their $16.6 million in losses that resulted from Reynolds' short position in BPTH. An amended complaint was filed by Axis's clearing agent Scott Reynolds on May 5th, 2019. From the complaint, we get some interesting details about the BPTH short position and the massive losses that resulted when Reynolds got squeezed. According to the complaint, Reynolds worked as a registered representative of Spartan Securities. He joined the firm in 2005 and was listed as a general securities principal. He served as the principal of an Office of Supervisory Jurisdiction of Spartan in Miami. As the principal trader of the Spartan inventory account, Reynolds was paid 80% of the net revenue from his trading and was responsible for 80% of losses resulting from his trading. According to the complaint, Spartan had strict limitations for the amount of money that Reynolds could trade with on a daily basis. Reynolds was restricted to a maximum intraday position of $500,000 per ticker symbol, never to exceed $500,000 at any time. Reynolds was also not to exceed an aggregate intraday total of $3 million at any time for all of his positions combined. Spartan, as a firm, was only permitted to purchase up to $10 million per day. The short position. BPTH shares had been trading at around $2 per share throughout 2019 and averaging only around 120,000 trades per day. On March 1st, 2019, BPTH saw a sudden spike in volume with 58 2,812,100 shares traded, causing the price to rise to a high of $8.84 per share on the day before closing at $7.72 per share. By the close of March 5th, 2019, BPTH had fallen to $4.62 per share. Believing that BPTH would continue to drop back to its previous levels, Reynolds executed a series of sales transactions that resulted in a short position of 824,436 shares of BPTH on March 6, 2019. Instead of the price continuing to drop as Reynolds hoped, BPTH saw another huge volume spike. 72,385,800 shares traded on March 6, 2019, sending the shares price to a new high of $14.40. The trades made by Reynolds were not authorized by Spartan, and since BPTH had an average price of $9.32 per share, or an aggregate $7,683,744 in short value, it far exceeded Reynolds' daily trading restrictions. The complaint accuses Reynolds of hiding these unauthorized trades by falsifying transactions logged with Brass Order Management System to create the false impression that he had not exceeded the limitations imposed on his trading. Despite Reynolds' attempts to hide the transactions, Spartan and Axis both learned of Reynolds' unauthorized position in BPTH that same day, March 6, 2019. Upon learning of the unauthorized position, Axis Clearing with Spartan management, including David Lopez, Spartan's chief compliance officer, instructed Reynolds to close out the short position. The promise. Axis alleges that Reynolds promised to close out the position by the end of the trading day on March 6, 2019, and to immediately send money to Axis to cover any losses realized in BPTH. With those assurances in place, Axis Clearing decided to not suspend Spartan, thereby allowing Reynolds to continue to have access for the sole limited purpose of covering the short position as promised. Reynolds, however, failed to close out his position as allegedly promised. Instead, he only partially closed his position in BPTH. In total, Reynolds closed out 259,687 shares at an average price of $10.06 per share on March 6th. That left Reynolds with 565,057 shares still short at the end of the March 6th trading session. Reynolds would end up closing out 5,386 more shares during after-hours trading on March 6 at an average price of $12.14 per share. Axis alleges that to induce Axis to keep his account open, Reynolds promised to pay $2 million directly to Axis by wire prior to 1 p.m. on March 7, 2019. On March 7, 2019 at 11:53 a.m., Ethan McComb, in-house counsel for Axis, sent an email memorializing the agreement to Reynolds. Reynolds failed to make the promised $2 million payment by 1 p.m. on March 17th, so at 1:31 p.m., Ethan McComb, on behalf of Axis, contacted TD Ameritrade and requested that they freeze Reynolds' account, which they did. The short squeeze. Entering the May 7th trading session, Reynolds still had a short position of 559,671 shares. Then the worst possible thing happened. BPTH gapped up huge and opened at $17.01 per share. As the rest of the short position was closed out, the price squeezed higher and higher, hitting $78.53 per share for an intraday high. The last 559,671 shares were closed out at an average price of $34.55 per share, resulting in a net loss to Axis of $16,600,000 from the short position. The aftermath. On March 8, 2019, Axis Financial Incorporated, the parent company of Axis Clearing, filed an 8K which stated the following. On March 7, 2019, Axis Clearing, the correspondent clearing broker recently acquired by Axis Financial, advanced approximately $16.5 million to a correspondent customer to cover losses resulting from an unauthorized security trade by an employee of the customer. The registrant, who has been informed that the customer's employee perpetrated a fraudulent scheme to evade its risk controls and falsified trades entered into its order management system. The correspondent is required to indemnify clearing against any losses and must repay the advanced, but clearing only holds $1.4 million in liquid assets of the correspondent customer. Repayment of the net liability of the correspondent customer of approximately $15.1 million is uncertain and may result in a charge of this amount during the registrant's current fiscal quarter. The registrant is taking steps to recover its potential losses, but any recovery may not be realized until future quarters, if at all. Among other things, Clearing has commenced legal proceedings to seize a brokerage account owned by the customer's employee with liquid net assets of approximately $13 million. The registrant also intends to seek recovery from various insurance policies and indemnifications held by the registrant and Clearing. These potential sources of recovery are uncertain and subject to the outcome of future legal claims and proceedings, which cannot be predicted and may not be sufficient to fully repay the losses. It is also unlikely that any recovery would be realized during the registrant's fiscal quarter ending March 31, 2019. Therefore, the registrant will likely establish a reserve against the advance of up to $15.1 million, which would reduce the registrant's after-tax net income by approximately $10.8 million during the current quarter, or approximately 0.17 cents per diluted share of common stock. On March 8, 2019, in an effort to settle the dispute without the need for legal action, Axis Clearing and Scott Reynolds entered into a settlement agreement. The settlement agreement required Reynolds to pay the principal amount of $10.5 million to Axis Clearing, comprising of an initial payment of $7.5 million to be sent via wire transfer by no later than March 8, 2019 at 8 p.m. The remaining $3 million would be paid over time and would be secured by a lien against Reynolds' San Marino property. The settlement agreement was signed by Escher Bear Edon, Chief Legal Officer of Axis Clearing LLC, and by Scott Reynolds. Reynolds failed to make the $7.5 million initial payment by March 8, 2019 at 8 p.m. Eastern Time, as per the terms of the settlement agreement. A few days later, on March 13, 2019, Axis Clearing filed its lawsuits against Scott Reynolds and a business entity alleged controlled by Reynolds named SRR Fortress Capital, Inc., which Axis claims has been used as a source for Reynolds to transfer hold funds and assets belonging to Reynolds. Axis claims that it also suffered damages to its business and reputation. Axis is asking the court for a judgment that includes $10.5 million plus interest provided by the settlement agreement, direct and consequential damages related to the damages suffered by Axis to its business reputation, goodwill, and property, an order enforcing the lien on the San Marino property, $16.6 million in compensatory damages, punitive damages, injunctive relief as appropriate, pre-judgment interest and costs, further relief as the court might deem just and appropriate. It is definitely a nightmare situation for Scott Reynolds. Additional notes about the lawsuit. The lawsuit is still ongoing. An affidavit filed by Reynolds is interesting to read. So is the motion to compel arbitration or dismiss the complaint filed by Reynolds' attorneys. Some of the more interesting arguments being made by his attorneys include the following. Reynolds had no access to his trading account on March 7th, so the remaining short position was actually closed out by Spartan employee at the director of David Lopez. Reynolds never made any oral agreement with Axis, and that since the pledge agreement emailed to Reynolds was never signed, it is invalid. Axis did not take proper steps to prevent or mitigate the losses. The signed settlement agreement was drafted with the intent to conceal Axis's clearing own wrongdoing and negligence from Axis Financial, the parent company, and Axis's bank's board of directors and shareholders. So far, Reynolds has had very limited success with his defense. The case is currently scheduled to go to a jury trial beginning on January 6, 2020 at 9 a.m. Spartan Securities Group Ltd. Ceases operations. On March 27, 2019, Spartan Securities Group Ltd. Discharged Scott Reynolds. According to Reynolds' broker report on FINRA, the official cause for the termination was that Reynolds traded in the firm's proprietary account that exceeded certain size and dollar limits by which he had previously agreed to be bound. On April 22, 2019, Spartan Securities Group Ltd. Filed a statement of claim against Scott Reynolds with FINRA for 1. Breach of fiduciary duty, 2. Fraudulent misrepresentation, 3. Negligent misrepresentation, 4. Breach of contract. Spartan Securities Group Ltd. Is seeking $16.6 million in damages from Scott Reynolds through the claim. In the claim, Spartan states in paragraph 31, the losses caused Spartan to fall below its minimum net capital requirement under SEC Rule 15C3-1. As a result, Spartan has had to cease its operation and does not have the necessary capital to cover the loss caused by Reynolds' unauthorized trading. Thanks to Scott Reynolds' short position in BPTH, Spartan Securities Group has ceased all brokerage services. Spartan Securities is no longer providing brokerage services for client accounts. For any client of Spartan with assets and accounts held at Axis Clearing, formerly Core Clearing, please contact Axis Clearing. Axis will be able to assist you in moving your account to another brokerage firm or to help deliver the securities and funds remaining in the account to you. Spartan's issues don't end with the BPTH short squeeze debacle. The broker-dealer is also currently dealing with SEC litigation against the firm from February 20th, 2019, charges that Spartan has so far denied.